You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to open up the Town of Branford Board of Finance regular meeting for November 28th, 2022. And first on the agenda will be to approve minutes of the September 26th, 2022 meeting.
I read through the minutes, Joe, and I approved it. I'll move the minutes.
I'll second it, Joe.
Motion's been made and seconded. Is there discussion? All in favor?
Aye.
Item number 2 is citizens' communication. If there's anyone in the audience who'd like to comment on tonight's agenda items, they're welcome to do that now. With no takers, we'll move to item number 3, which is to hear a presentation from the Andriel Group and CYL Financial Synergies with regards to the performance of the Town of Branford Police Pension Plan for the quarter ended September 30th, 2022, as well as the other post-employment benefits and the volunteer fire, and then move on to item number 6, the coastal resiliency. Good evening, gentlemen.
Good evening.
Good evening. Thanks for having us here. As is customary, this is Robert DeLuca from the Andriel Group with Michael Lepore from GYL Financial Synergies. I'm going to provide a background and backdrop of the investment experience and marketplace for the third quarter of 2022, some economic commentary, and some additional color of quarter to date. And then Michael will take us through the experience of the respective funds and the recommendations that we have this evening. So, as we all know, it's been a very difficult 2022 in the investment landscape. For the third quarter 2022, we saw again a quarter of negative returns by all major asset classes. We look at stocks, bonds, and other types of commodities, bringing equity markets through on a year-to-date basis through September 30th of down about 25%, and fixed income markets down about 15 or 16%. So that was 3 consecutive negative quarters for both stocks and bonds, which has made it for a very challenging and difficult environment. The number of factors that are attributed to that, there are some that are very obvious to all of us, which is the conflict in the Ukraine, the very elevated and high inflation issues, as well as expectations of slowing economic growth globally, and the COVID policies in quarantines and lockdowns in China that have had impact on supply issues and things to that nature. So as we go through that, that sets a reasonable backdrop as to a very difficult return period that we've just been through. Since the end of the quarter, we have seen a positive movement in both the equity and fixed income markets from September 30th through November 25th. I apologize, I didn't add today's data in when I did my workup on this because I had done this on Friday. But we had seen equity returns that were up 15 to 18% on a quarter-to-date basis. So the markets did advance. So we have what we would categorize as a bear market rally in the equity markets, which seemed to fade back today off of some technical indicators. So that's been positive and beneficial to the funds on the heels of the really negative quarters we've experienced. We are seeing positive developments in the emerging markets, Latin America, as well as parts of emerging Asia. So those parts of the global economies are behaving better than the developed economies, such as the United States and the Eurozone, and the challenges in Japan as well. So just really more from an economic perspective. What is interesting to note is that we did see negative gross domestic product, GDP, in the first half of the year, with positive increase in GDP in the third quarter. We are seeing, when we look at the forecasted models, the models and the forecast are indicating the potential to see negative GDP in the first half of 2023. So the commentary continues to revolve around, are we in a recession, going into a recession? What will that look like in V? So the markets are discounting some level of that experience at this point. What also was worth noting is that through all of this, we've also seen oil prices decline. While home heating oil prices and natural gas are still fairly elevated, the West Texas Intermediate crude is year to date now only up about 2.5%. So it's come down significantly in price over the last couple of months. So we have seen some of the commodities decrease in price. We're also seeing the US dollar start to weaken a little bit. And as we've been reading through corporate earnings return reports over the last several quarters, one of the most common responses in the results that were reported was the challenge of a strong US dollar impacting their bottom lines. So we're seeing the dollar weaken a little bit. That's going to help US corporate profits. So for our domestic equity exposure, we see this as a positive development. We do continue to see challenges with inflation. While inflation has, on a sequential period, meaning month over month, increased less, it's still fairly high relative to a year ago, and so on. So the concern is, when and by how much will that rate of change of inflation start to decrease or slow down? So we don't think we're going to see a deflation period, but what we categorize as disinflation, which is where the rate of inflation is increasing at a slower amount than it was. The challenge to that is going to be how wage inflation continues to behave, and the unemployment data. I think those are the two big risks to the inflation position at this juncture. So if wage inflation continues to move higher, that will further increase the velocity of money, which will cause further inflation challenges. And the unemployment situation is quite interesting. We are arguably full employment in an environment where you would think there would be more job losses. So even where there are companies downsizing, like Amazon and others, it seems that the unemployment rate is still staying very, very low in this environment. So that means that we can see a period that may be able to navigate without having material job losses across the economy. And our friends at the U.S. Federal Reserve that watch all of this information and pull this together have continued to increase interest rates. In November, they increased interest rates by another 0.75%. So that brings the target federal funds rate now to 3.75 to 4% range. The expectation is that the Federal Reserve will increase rates by 0.5% at their next meeting in 2 weeks, and then another additional interest rate hike at their first meeting in 2023. I believe that's February 1st. From there, it's anybody that guess the direction on rates. Our hope and expectation is that we see a Federal Reserve go to a pause where they look to see what the cumulative effects are of all of these interest rate hikes, because they will have some level of impact to the real estate markets and other types of lending functions in the system. And overall, we've seen interest rates globally move higher, and that's been quite kind of interesting as they unwind the quantitative easing experiment that they did. And we've seen negative yielding debt globally decrease, where a year ago we had $16 trillion in debt globally that was at a negative yield, meaning that if you lent money, if the German government wanted to borrow money, people that were lending them money were accepting a negative rate of return. That has changed significantly. That number's come down from 16 trillion to 1.4 trillion and continues the downward trajectory, meaning there's some level of normalization in the global interest rate policies as they unwind some of those other quantitative easing programs that they did globally. So some really fun, exciting backdrop for you. And if you'd like me to comment on the yield curve later, I'm happy to, and talk about inversion. You've heard me talk about that the last couple of board meetings, so I'm not going to repeat it. With that, I'm going to transition to Michael for the experience of the funds.
I have a question though for you. if we've had 2 quarters of negatives, now we have 3 quarters, are we in a recession or not?
So the academic definition in the textbooks for a recession is two consecutive negative quarters of GDP. The ultimate arbiter of the definition is the Bureau of Economic Labor and Research. Let me get that acronym correct?
Mm-hmm.
And they also tie into that changes in employment data. And the employment data has stayed at a full level of employment with unemployment at 3.5%, 3.7%. So they're not ruling this as a recession. The period where I'm referring to the negative returns for 3 quarters. So it's very unusual to have stocks and bonds have negative returns for 3 consecutive quarters. So that doesn't correlate with are you in a recession or not. They're related, but they're not direct.
So is Rob saying yes or no?
I don't know, it's, he's on the borderline.
If I was an economist, I would tell you whether we were in a recession or not, but I'm not an economist. They haven't made that, those economists haven't come out and said when or if. They tell you after the fact.
Okay, Rob.
There's an old joke that economists have predicted 12 of the last 8 recessions, but I think Rob's point is well made, and that is depending upon how you look at it. If you take kind of the common definition of 2 consecutive quarters of negative GDP growth, we saw that in the first and second quarter of this year. We then had positive GDP in the third quarter, but to Rob's point, the organization that officially declares a recession has not done so yet, because they look at other things in addition to, such as the very strong labor market. And there's one argument that states at 3.5% unemployment, how does that translate into a meaningful economic slowdown? So the short answer is the jury's still out. We're not trying to be coy. It's just there really is no definitive answer at this point. Some people would think that we are in a recession, others say not, but I think the big picture is whether we're in a relatively shallow recession or whether we're in a period of anemic growth, the playbook is substantially similar. We don't anticipate going into a deep, prolonged recession, nor do we anticipate that we're just going to kind of go back to that hyper growth that we've experienced for some time.
I like that, Mike, we're in a shallow recession.
Okay.
Okay,
Right.
okay.
Charlie?
Yeah.
Charlie, Rob?
Right. So on that, I noticed a couple of folks are looking at this chart, which is on the first. There's no pagination, but it's the first page in tab 1, and this is a chart that we historically have not shown you, but we included because I thought it really provided some interesting historical context, and it goes back about 75 years to the World War II period, from April 29th, 1942,
Page.
through the fourth quarter, right after tab. Yeah, there you go. Right after tab 1, or one more page.
He doesn't have it.
Oh, it's not in that
You
book.
had a special copy.
Okay. A special copy. Okay.
Here it is.
There we go.
Oh, maybe upside down, too.
So what this is showing in is bull markets in blue, bear markets in gold. And I think really the lesson to take from this is with approximately 75 years of data, we can see, just under the category of a picture's worth 1,000 words, that bear markets are not at all unusual, and they do happen with a good deal of frequency. If we look at them historically, they've historically averaged about 11 months, which is right about, if you take January 1 is more or less the peak of the market, we're right at about that 11-month mark. From peak to trough, bear markets have averaged a negative 31%. From peak to trough, we got to about negative 27%. Now we're down probably somewhere closer to what, about 17% or so. So in terms of severity, what we've gone through in 2022 thus far has really not eclipsed kind of the average, and in terms of length, we're really right at the average. But I think more significantly than that is if you look you can kind of see, there's a lot more blue than gold on this page. And what does that mean? That essentially means that the bull markets tend to last a lot longer, and then they tend to have much more appreciation than the bear markets have depreciation. So I think this is just important to get a little historic context. Now, what is unusual about 2022 is that we've seen the equity markets and the bond markets posting negative returns. And that is somewhat unusual. It's really, we have to go back to the early 1990s before we, until we see that sort of thing again. And that came around relatively quickly, but that is a bit unusual. The one silver lining to that is for the pension plan is, although you don't discount your liabilities at a spot rate or kind of at the yield curve because you're a municipality, this does have an impact on the higher rates does have an impact on the cost of funding your future liabilities. And it's worth noting that even though we've seen some downward pressure on the price of the bond portfolio, ultimately, since the duration of your liabilities is longer than the duration of your bonds, the higher yields will in the long run translate to greater returns on the bond portion of your portfolio. So we have to get through the pain that we're going through right now, but in kind of the intermediate to long term, those higher yields can be beneficial to the income and to the into the return expectations of the bond portion of the portfolio. So with that as a little backdrop, let's turn to page 19 on tab 1, if we could please. And we'll start with a 35,000-foot view, as we always do. Performance really spot on with that of the benchmark, going back to inception of 4/1 of 03 at 4.97%, total return of 157%. That has come with about 8% less risk. Either when you look at risk is either defined by beta or standard deviation. So we've gotten essentially the return of the benchmark with about 8% less risk, which translates to a positive alpha or value added. You can see in about 2/3 of the way down on the right on page 19. In dollars and cents, we started 4/1 of 03 with $8.3 million. As always, ignore the contributions and withdrawal lines, because that includes when we move money amongst the accounts and rebalance. We've had net positive cash flows, in other words, contributions made in excess of benefits paid, of approximately $990,000, and then $16.5 million in earnings, bringing us to the ending value of $25,818,000. As Rob mentioned in his comments, positive returns on both the equity and fixed income markets since the end of the quarter, and we've had earnings as of Friday's close, so maybe that'll be slightly less as of today's close, but earnings of $1,962,000, and so that brings us to a value as of Friday's close at $27,416,000. Turning back a couple of pages to page 14. We can dig into the performance, or actually page 15, excuse me. The relatively high credit quality of the fixed income portfolio during times of stress is when it earns its keep, so to speak, and we have seen some relative outperformance of the bond portfolio, both the investment grade bond portfolio as well as the high yield bond portfolio. Comes as cold comfort because we are certainly down year to date with the bond portfolio down 13.25%, equity portfolio down just under 17%, and the total portfolio down 14.5% for the trailing 1 year. For the quarter, down 4.3% versus the benchmark down approximately 4.7%. So we have seen some excess performance on a relative basis, although of course the numbers are still negative for the really for all time periods until we get to the trailing 1 year. And as that higher quality credit restriction on the bond portfolio has continued to add value during periods of market stress. It gives it a little back. It gives a little bit back when the market's really running, but over time, and you've had that in place for close to 20 years, it's been additive in terms of providing downside protection. So as mentioned, we've had a nice, at least short-term recovery in the market. We'll see how things play out for the rest of the year. but I think it is noteworthy, looking at Rob's comments, that we're starting to see some glimmers or rays of light in the emerging market in particular. We're probably closer to the end than we are to the beginning of the rate hikes, although the Fed is going to continue to be very data dependent, and there's likely several more hikes coming over the coming months, although we anticipate the real heavy, the 0.75% hikes are probably, at least for the time being, have been put on pause. So with that, I will pause and open it to any questions, or we can dig into the rebalancing.
Questions on this presentation so far? Now we'll talk about the proposed rebalancing
Okay.
with regards to the police pension fund.
Great, so you all have a sheet, rebalancing sheet in front of you, as we do each quarter. Rob's team and my team get together and discuss this, and we get together with the finance director and hash through our recommendation. As far as the police pension is concerned, if you look at the row that says cash, right under the top gray line that's highlighted fixed income account total, that $499,000 in cash, that's essentially interest and dividends that have accumulated in the account. In addition to that, in the cash account itself, closer towards the bottom where we see $891,000 in cash, that's the normal allocation to cash as part of your broad overall asset allocation, and that's overweight as we do each year to set aside some cash for benefit payments, since you make one large contribution typically in the summertime. And so what our recommendation is for today is to keep that as an overweight position in cash, redeploy the roughly $500,000 in cash that's accumulated from interest and dividends. You'll see that approximately half of that would go to fixed income. So following up on what I had said earlier, that is more dollars that we're deploying to fixed income at higher yields than we've had in some time. And then there's a mix of sells and buys. We're a little bit overweight to the S&P mid-cap and the S&P 500, as well as to the oil and gas partnerships. And some of that overweight would be redeployed into the non-U.S. markets, as well as small cap and real estate. But again, we'll keep the overweight to the cash position, if you will. We're just talking about redeploying the accumulated cash from income. And that's that roughly $500,000, about 4 rows from the top.
Okay. Questions on this proposed reallocation?
I'll move the recommendation, Joe.
Been moved,
Second.
seconded. Is there discussion?
I was going to ask
Right.
Mike, though, what does this do for the fund?
What it does is it basically takes about $500,000 out of cash that's earning very little. It redeploys it, about half of it, to bonds, investment grade bonds. And so, the yield on that for new purchases is, you're looking probably in the high 4s, maybe the low 5s if they buy some corporate bonds. And then approximately half of it would be deployed into non-U.S. equities, as well as small cap U.S. equities and U.S. real estate. So if you look at the far right column on the
Yeah, I saw that.
Okay, yeah.
All right.
Anything in black is a buy, anything in red is a sell.
Okay, I got it. All right, thanks.
Sure.
Okay. No other discussions? It was moved and seconded. All in favor?
Aye.
All set.
Great, thank you. Okay, so moving on to tab 2 is the OPEB trust. Similar report versus that of the police pension. You'll notice that the numbers a bit stronger. I'm on page 15, in that we are down about 9% for the trailing 1 year. That's owing to the fact that there still is a hefty portion of cash and cash alternatives in the OPEB trust. During the last quarter or so, a good chunk of that cash was taken and used to purchase cash alternatives, we'll call them, short-term treasury bills, essentially, to get some additional yield. While you're still getting quite anemic yields on money markets, we were able to get a decent yield on short-term treasuries. It's not going to kind of impact the 7-year plan that we went on to deploy the cash in the OPEB, but it will allow us to get some clip some additional coupons essentially and get some additional yield in the portfolio. And sort of under the category of, what a difference a year or so makes. We were so used to getting, 0 or near 0 in that, and now
Now we were getting 3%.
3+. Yeah.
3% plus, and those rates are continuing to move higher, so
Are they near in 4?
treasury bill rates now are over 4.
Over 4.
Yeah.
Yeah.
So, it's so much different than a year ago when we were sitting here and interest rates were 0 and there was no other alternative. Now we can at least earn something with safe dollars in a safe place.
So we haven't changed the asset allocation at all, and it doesn't change your investment policy statement, but it is a way to pick up yield, and we have bonds maturing every 6 months. So as rates have actually gone up a little bit since we bought those, when they start to mature, we'll be able to take advantage of that as well.
Listen, there's 2 months, aren't there 2-month bills also?
There are bills that mature everywhere from 1 day out to 1 year.
Really, 1 day?
Yes.
Okay.
And of course, you can buy them at the auction, or you can also buy them on the secondary market, so you can, kind of fine tune your maturity if you want. But yeah, there's a wide range of bills available. And so with that as the backdrop, that overweight to cash, while it on an absolute basis provided a buffer to the downside, on a relative basis, in a strange way, it actually kind of weighed a little bit on the relative returns. And we have, you see there's a little bit of a lag for the trailing 3 months. We're down 2.58 versus 2.36 for the benchmark. The simple reason for that is because those treasury bills are really what they call zero coupon bonds. They don't pay any interest while you own them. And so the price will move around slightly while we have them, and they don't pay interest until they mature, essentially. So we went from money market funds, which have really zero volatility because they stay at $1, to treasury bills, which have very little but not no volatility. So it created a little bit of near-term drag. So if you're wondering why all the underlying investments performed consistent with expectations, but at the top level there's a little bit of a drag, it's because of those treasury bills that are priced daily. But at the end of the day, we know exactly how much they're going to mature at, and they pay that interest at maturity. Okay. So with that, as far as the OPEB is concerned, we're quite close to policy. We're not recommending any rebalance activity. We've done a couple of slugs or tranches on the regular investment timeline over the past couple of months. And right now we're very close to policy. We're at 34.6% in fixed income versus a policy of 35%. And about 57.5% versus 57% in our target for equities. And then for high yield fixed income, we're at 7.9 versus a target of 8. So we're really right on track with our target. So we don't recommend any rebalancing. And just to give you an update, much like the pension, we've seen a nice increase in value, and since September 30th. We've had an increase in value of $1,024,000, and bringing us to a value as of Friday's close of $35,772,000.
Okay, thanks, Mike. Questions on this?
Okay.
Let's move on to.
Great. So moving on to tab 3, which is the fire. Again, in the interest of time, I'll go through it at a quick rate unless there are any particular questions. But much the same experience as the police pension, as it has a similar asset allocation. The only real difference is because of the relatively small dollars in the fire plan, we use a Vanguard index fund for the fixed income rather than the actively managed portfolio. So it didn't provide quite the same protection more recently than that the Mesro portfolio has, but in the grand scheme of things, performance has really been consistent with the benchmark and that of the underlying, or of the police pension fund rather. With regards to rebalancing, our recommendation is similar to that of the police pension in that we've accumulated a little bit of cash, and there's about $127,000 in cash that's accumulated, And so we would recommend redeploying about 90,000 of that. That's the amount we're above and beyond our investment policy. And it will be similar transactions to that in the police pension, with the exception of a small sale for the oil and gas partnerships, taking the excess cash out of the cash account and redeploying that across about half of it to fixed income, or actually closer to a third of it to fixed income, and then the balance to equities, with the exclusion of the S&P mid-cap and the S&P 500, which are at or above their target.
Questions on the rebalancing of the 90,793?
Just one comment. Mike, it looks like you folks really believe the emerging markets are coming along.
Well, I think it's really a combination of two things. That's a great observation, because the emerging markets have been quite weak for two reasons. For one, just kind of for the same reason that we've seen across the globe, and in a lot of ways the emerging markets kind of are struggled more with COVID than a lot of the developing markets, or developed markets rather. But also the strong dollar has weighed on the emerging markets, in particular because a lot of them borrow in dollars, so it makes it more expensive for them to pay their debt. As Rob mentioned in his comments, we're starting to see some glimmers of light there, although China certainly is still struggling. We see Latin America is doing reasonably well as other parts of developing Asia, ex-China, and that continues to be where we anticipate really the growth, not only in population but also the growth in the middle class will come. And so we still are believers in the emerging markets. We're not overweighting them, but we are kind of going back to or recommending going back to a neutral weight. Okay.
Okay. Any other questions on this or comments? You need a motion on this, right?
I'll move it, Jim.
I'll second it.
Moved and seconded, discussion on the rebalancing. All in favor?
Aye.
All set, Mike.
Okay, great. All right, so lastly, we'll come to the Coastal Resiliency Fund, and that is tab 4. Value of the CRF at the end of the quarter, I'm sorry, I'm on page 15, tab 4. Value at the end of the quarter was $1.706 million. We were down 3.6% for the quarter, besting the benchmark, which was down 4.3%. And across the board, due to the heavy weighting to fixed income, as well as the weakness in both the equity and the fixed income market, seeing some absolute negative numbers in the short term relative to the benchmark. Performance has been actually ahead of the benchmark fairly nicely by about 1.75% or so. But again, I realize that kind of comes as cold comfort per se. That we saw negative returns, pretty much a quarter into this. But I think it is also worth noting that, again, with such a long time horizon as this fund has, in the anticipation of making regular contributions to it and the heavy weight towards fixed income, in the long run, those higher yields will be beneficial, although it's certainly weighed on the nearer term performance. On page 17, performance slightly ahead of the benchmark, and it's come with about 15% less volatility. So on a risk-adjusted basis, performance has been reasonable. But again, certainly we recognize that in 11 months or really just 12 months since this was invested, there was a negative return certainly in both the equity and the fixed income markets. As far as rebalancing, we don't recommend any rebalancing. We're fully invested in the CRF. And we are invested, or the allocation is consistent with that of the underlying policy. And of course, much of the policy is driven by statute, at least your equity to fixed income allocation. So no action recommended for the CRF.
Okay. Questions on the Coastal Resiliency Fund?
Just
Barry?
a question,
Yes, sir.
in general terms, on the overall portfolios. What kind of a return are you looking at by the end of the calendar year? Do you have any idea where it would be net, meaning net advisory fees, et cetera?
where we'll be at the end of 2022.
Yeah.
I mean, I really couldn't hazard a guess, other than to say we are, as we saw here. Just bear with me 1 second to bring back
The returns
pages.
on as Michael looks for, he's looking for, the returns on a year-to-date basis across the portfolio are still negative.
Yeah.
And I would not expect to see them turn to a positive point between now and the end of the year. That would, to get there would be a meaningful rally in equities. And that's, while it's not hard to imagine, there's just a lot of headwinds for the market to advance to that degree in that short of a period of time. Because you're talking about, could the market advance over the next 4 weeks at double digits? That would definitely change the trends in the market in a very positive way, because it would definitely break the bear market trend. I think we're still, in for tough times in the immediate term, meaning that we could be going, a reasonable degree of sideways volatility. We don't know if the low has been put in. We won't know that until after the fact. But clearly the market did make a pretty painful low in September and has moved higher from there. And then at the most recent technical point, it did fade away from it. So we think the market can pull back from these levels on a technical basis. So that's why your question's really hard to answer, because on a technical basis, I would think the portfolio will be, on the equity side, worth a little bit less at the end of the year, and the fixed income side probably stable. But that's, a guess, not based on, my ability to soothsay is limited.
Yeah, and if you look on page 1 and 2, it's got the performance summaries here of all the indexes, and they're all in the red, so just a matter of how much it recovers, if it does, but
Right.
it has recovered since this is 9:30.
Exactly,
So-
and it's an interesting dynamic when you look at, at the end of September, you had the S&P 500 down 24% basically. Through the end of September, down 23.87.
Yeah,
And year to date, that's now down like 17%.
right.
That's been a meaningful move up in the market, and we would categorize as a bear market rally,
60 days, right?
right, in a very short period of time.
Right.
We have seen the longer end of the treasury market rally, which is with longer term treasuries yields going down, prices go up. So that has improved the dynamics of the portfolios on the fixed income side. So fixed income assets have improved in price quarter to date. However, that comes with the yield curve now having a very sharp inversion to the tune of 75 basis points, meaning that the 2-year treasury yields 0.75% more than the 10-year treasury, which is one of the sharpest inversions we've seen in a long time. So it begs caution in the equation, which is why we were deliberate when we deployed money in the summertime, and we spread that out over the quarter, and why we're still continuing to be a bit on the cautious side and just making adjustments to the portfolio here to take a little bit of gain out of U.S. equities, deploy to parts that we think are undervalued, and also adding to fixed income.
Okay.
Yeah, I think it is noteworthy, if I can just make one comment, or 2 comments. One, we started the year at about $30.75 million. As of last night, we're at about $27.5 million, so it's about 10% decline, give or take, through today, using
Yeah, probably took a good hit today.
very rough numbers.
Yeah.
But I think, big picture, it's also worth noting that Branford tends to be very conservative with your overall asset allocation at about 60% in equities, or actually closer to 55% in equities, and then which is far more conservative than that of many other pension plans. And so your absolute numbers, although they're negative, are actually holding up quite well versus many of your peers who are more aggressively invested and tend to have much higher equity allocations.
We're
in
not
their
losing
pensions.
too much.
Well, I mean, any amount is too much, of course, but I mean, it does come with the with the volatility in the market, and I think it is worth noting when we do our asset allocation work and what have you, that we work on with the finance director and what have you behind the scenes, that's takes into account that we will have down markets, and we've certainly been through down markets more trying than what we've gone through in 2022. So it's not to say that it makes it feel any better when we're going through it, but I think it should give us a little.
It doesn't.
No, I think we should. It's somehow important. Sometimes important to remember that is part of the kind of part of our modeling, and that we understand that these things will happen.
Thanks, Michael. Other questions? We're good to move on? Thank you for the presentation.
Thank you.
Thank you.
Thank you.
Jim, you had a question? A comment? Sure.
All right. I mean, when I listen to the presentation, and I know these are tough markets, I sort of take a step back and say, well, what is our real risk here? And as a pension fund, the real risk is that your liabilities will grow faster than your assets over time. And so we tried to develop a funding policy that's based on a certain rate of return. And while we can't control whether the markets go up and down, I think we've seen tonight from the chart, roughly every fifth year on average is a down market. So what can we do as a community, as a board, in those environments? I think many of the things that the board has done, they've done an asset allocation based on looking at the duration of the liabilities, which are roughly about 6 years. We recognize that timing the market is difficult. Picking stocks is difficult. So we buy index funds. We take a passive approach with the exception of fixed income. We can control our investment policy. That's something that we work on, and we can control our funding. Every year we put money into the fund, which I think is an important point to make because, unlike a retiree that's pulling money out of a portfolio and pulls out more in down markets, it's kind of the old giving blood and getting stabbed analogy. The town is continuing to put money in, and the town has an infinite time horizon, especially given the changes we made to the police pension plan a few years ago. We control our return on asset assumptions. We work with the actuary, and we control our smoothing policy, which helps us on the funding side. And of course, we can decide, as you've done tonight, to rebalance to those policies. So while there's a lot that we can't control, there's a lot of things that a lot of steps we can take. And I know everybody in this room knows that, but I was just thinking somebody watching it on TV, what sort of reaction might they have? And I think the takeaway is that the town is acting in ways for the long-term interests of the pension plan and doing what they can do, recognizing that just like 99% of the population, they're not going to be able to successfully pick stocks. They're not going to be able to successfully outperform indexes, which is what we're in. So I think that's an important takeaway. Whether I don't know what the market's going to do tomorrow, but I suspect that 5 years from now, and there's no guarantees, we'll be in a better place than we are today. And those pensioners that are going to retire 5 years from now will be happy that we did so.
Thanks, Jim.
Thank you, Jim.
Appreciate that. Okay. Gentlemen, thank you.
Thank you very much.
Thank you.
Move on to item number 7. Pursuant to section 42-1 of the Code of the Town of Branford, the wastewater treatment plant superintendent requests a favorable opinion for a bid waiver on a 3-year contract for disposal of grit or scum with the All-American Waste. Good evening, Brian.
Good evening, everyone. All-American Waste, we've been using them for years. We used to dump the loads in Manchester, but at the end of September, they no longer took the grit and scum from us. So I went around at different areas, and Bridgeport will take it because of the mixture of it. Only certain landfills will take it. If I couldn't get Bridgeport, I would have had to go out of state, which would have been more money for fuel and costs for the trucking. So that's why there's a Traber, it's a place in Bridgeport, and that's where the loads will be going. That's where they're going now. So they had an increase with the cost. So All-American Waste, we've been using them for 15, 20 years. They're very reliable. They come every week with the loads, and bring them right to Bridgeport. There's no trouble with them, and there's not many in the market that do it. So we had an increase of the cost that was $31,794 a year. It's shot up to $59,000 on the cost.
Okay.
Because we're taking it to Bridgeport now. Manchester will not take it no more.
You've got that money in your budget?
Yeah, I have it in the budget, yes.
So I'll read a draft resolution here for consideration. Pursuant to section 42-1 of the Code of the Town of Branford, the Board of Finance recommends that the Board of Selectmen approve a 3-year extension to our current agreement with All American Waste for the disposal of grit and scum.
I'll move it, Joe.
Been moved by Harry, seconded by Pam. Discussion, questions? All in favor?
Aye.
Thank you
Thanks,
very
Brian.
much.
Okay. Next, number 8 is to consider, and if appropriate, approve a transfer request from the undesignated fund balance for the town green improvement, and the resolution as follows. And hi, John. The increase from fund balance of 200,000, increases in the operating transfer out of 200,000, and then Fund 203, transfer in of 200,000, and the expenditure side would be state grants of 500,000 for a total of 700,000. And the resolved draft suggested resolution is resolved that the Board of Finance recommends to the RTM an increase in the appropriation of the 2023 general fund budget from $124,524,065 up to $124,724,065. Increase will be funded through an appropriation from fund balance and steep grants that will be used for improvements to the town green. So that's the background, and John, welcome. You want to go over the project to start with? If you've got questions, Jamie will help us out.
Sure. Yep. Good evening, everybody. So we've got, you guys had voted on a new position for the engineering department, or design engineer, relatively new position. He's been very, I don't want to say aggressive, but he's been looking for grant money, which has been great because we all love grants. So as the STEEP is usually an annual grant opportunity through the state, Small Town Economic Assistance Program. In the past has been no match required for this grant. So in the past we've done some of the sidewalks around the green on the South Main Street side. We've done Stony Creek dredging project, Stony Creek boat ramp was the most recent one. Indian Neck Firehouse was another project funded through the STEEP grant. This year, OPM has kind of changed their tune a little bit. While there isn't a match required, they consider a match to be more competitive, right? So in looking at projects that the engineering department and the selectman's office have kind of looked around town, the town green is really an extension, and the letter that I addressed that, we did the Tyler Green project that was just recently completed, some new sidewalks there and new curving. We've got the East Main Street Island with the sign that kind of a gateway from the east. We're looking at another project a little bit further down the line of West Main Street and that island, kind of dressing that up. And then we have the reconstruction of Main Street that we're anticipating in the next couple of years. So this will kind of bring everything together. The town green, I'm sure you guys are aware, you've seen how much use the green has gotten in the past few years. So this will kind of freshen everything up and bring it up to par with all the other pieces that we're moving around right now. So with that, we did, with the grant application, through the engineer's estimate, the total cost came to about $670,000, so that would be a $170,000 match. Convenient or not, that's about 25% of the overall grant. Looking at the grants that were approved through OPM. The average of the matches for $500,000 grant, which is the maximum of $500,000, was about 31%. So, you know, we're at 25. We're kind of right there with everybody. Of note is that of all the $500,000 grants that were approved, there were none that didn't have a match.
None that didn't have a match?
A matching component, right, a local match.
Really?
So, so I think we're seeing that shift with, perhaps with OPM, that they're going to start requiring or strongly, you know, advising you to offer a match to be more competitive.
So you get more points with a match?
We do, absolutely. So, and there were some outliers, you know, that I didn't include in that, where, you know, they were doing $3 million projects and just looking for some supplement to their projects. But so of those projects in the state that were awarded that grant, again, it was about 31% match. So that was the, you know, again, the $670,000 is the total estimate for the project. However, as Jim had stated in his letter and mine as well, you know, we're seeing the volatility in the market, so we are looking for a little bit of a buffer in there. So that would be why we're asking for the $200,000. In addition to that, you know, in order to get the $500,000 reimbursement, you need to spend every bit of that $170,000. So, you know, that gives us the ability to, you know, go to 171 if we need to.
So, John, you provided a kind of a map that kind of outlines the scope of the project as well, or if you want to just hit quickly on the scope.
Sure, yeah, this is kind of our conceptual for the grant application. Obviously needs some fine tuning, but the big focus that we're looking at is really the safety around the green. We recognize some areas that do need some upgrades. Anyone who's parked in those kind of angled parking spots towards the beginning of the green, or Town Hall Drive, you know, you always see people walking behind the cars there, and people backing out aren't looking that way. So we would like to add some sidewalks along that side. We're looking at some lighting improvements just to add some more ambient lighting. It is very dark across the green, so kind of give a little bit of element of safety there. Really dressing up the green itself. You know, get some fresh topsoil on there, regrade it, make sure we're not getting the puddles, things like that. A little bit of drainage work on Town Hall Drive, and then we're really looking at maybe a raised crosswalk to Town Hall, because it seems that people do fly pretty quickly through Town Hall Drive. So kind of the refresh elements, some safety elements to it. That kind of gets you to that engineer's estimate that we're talking about.
Okay. Questions from John on this? Charlie?
John, did you say that you were adding some parking places?
Not parking spaces, Charlie, but they're really some sidewalk. We'll refresh the striping out there and make that all compliant, because it is a little wonky.
Okay.
I'm sure it hasn't been touched in over 30 years.
Listen, I thought the answers to the questions, you know, were very convincing, and I think it sold the project. So whoever wrote them, I thought, well, they convinced me.
I will relay that to our design engineer.
Okay.
Yeah, I'll give him all the credit.
Okay.
How long is this going to take?
We're
Said 12 to
anticipating-
24 months.
Yeah, we've got a timeline through the steep grant itself. There's a period of performance. We're probably going to phase this out a little bit, just because we want to make sure we're not getting ahead of the Main Street project. You know, we need to tie things in, but you know, anticipate maybe some lighting and some irrigation, maybe regrading ahead of that project, so that we can get a head start.
I thought it said something like 3 to 5 years.
No, 12 to 24 months.
Oh, is that what it was?
That's our estimated schedule, yeah. There's not, to be honest, there's not a ton of work out there. I mean, the price would kind of say otherwise, but that's really just the price of materials and labor that we're seeing these days. But a lot of it's, you know, replacing a lot of the older elements of the town green and kind of getting things aligned a little bit.
Putting in irrigation.
Irrigation's gonna be a big one, because it takes a long time to rebound from those book sales. So.
Right. Good one, John. All right, questions? From John, somebody want to move it?
I'll move it.
I'll second.
Moved and seconded. Additional discussion? All in favor?
Aye.
Okay, thanks, John. Good luck. Okay, number 9, to consider and if appropriate, approve a transfer request from the finance director regarding the Harbor Street Culvert project. Again, from the general fund, a increase of 97,000, and in Fund 730, the transfer in of 97,000, and a bond proceeds decrease of 97,000. I'm not sure if I understand that one. But resolved that the Board of Finance recommends to the RTM an increase in appropriation for the fiscal year 2023 for the general fund budget from $124,724,65 to $124,821,65. The increase will be funded through an appropriation from undesignated general fund balance. And Jim has provided us with a short letter. Jim, you want to hit the high cap on it?
Sure. Basically, the project is essentially completed, but the project still has a period of time in which it needs to be audited. And, we anticipate that there will be some ineligible cost, and some of the revenue we received will have to give back because our expenses were lower. And so, and the reason you saw the negative bond proceeds is because this project, the revenues were allocated between bonds and grants. And so, so we didn't bond the full part of the bond portion. And so, so we're not going to be, so rather than bonding the 97,000, the request is to appropriate a fund balance. So in essence, we're reducing the amount that we would have allocated. We could go out and bond more for this project based on the authorization.
Right.
But instead, we're going to just substitute that cash with
cash
fund
for it.
balance.
And Jim's got a worksheet that demonstrates the need for the cash. Questions from this? Charlie?
So what does it cost for us to issue a bond? Like if we had $500,000 bond, what would that cost us?
Well, you have really two components of the cost. You have the interest rates, which is what you're financing at.
Yeah.
I would guess that the rates now are probably, for us, would probably be in the mid to high threes, depending on how long it is. The other aspect of going out bonding is you have transaction costs. We go to bond rating agencies, we print an official statement,
Yeah.
we actually hire a bond counsel, and we hire a financial advisor. So there's sort of production costs with the transaction. But we're not planning on doing any bond issues in the very close future. So and the town's fund balance is strong. So the thinking is, well, let's for $97,000, and it may not be $97,000. At the end of the day, we may still have money left over in here, but we only want to go for it once. Is that it just seemed to make more sense to use some of our surplus to fill that cash need as opposed to borrowing it.
Okay.
Okay, questions? Harry or Pam? You're all set? Jeff?
Good to go.
Okay, somebody want to move this?
I'll move it.
Moved by Charlie,
Second?
second by Harry. Discussion. All in favor?
Aye.
Aye. Okay. Item number 10 is to consider and if appropriate hear a request from the Board of Education for the following redesignation request. And from 3 projects: asbestos abatement, $26,075. Branford High School Architectural Study Sports Complex, $15,000, and system-wide door replacement of $28,584, and moving that to door replacements of $69,659. Welcome, gentlemen.
Thank you. First off, I would like to thank Ms. LaBanca for putting together a handy sheet that captures the totality of our request, which includes what you just mentioned, but there are a couple other things as well. It says item number 10 on the top.
Yes.
So we're here primarily because of the new capital funds ordinance. There's some projects that we just need a little more time to get done, and then some others that we want to redesignate into door replacements and code compliance, which we we ask for monies in every year's capital budget for those things. Mr. Carbone can answer any kind of specific project questions, but if you'll indulge me, I'll just quickly go through the list of what we have here.
So
If you like that.
we have the revised list that's different than the agenda.
Oh, all right.
So what it is the 69,658 is listed, but the total of the redesignation is 203,192. Catherine did give me this before the meeting, but it was at the bottom of my list here. So I'll let you proceed, Don.
All right, so the high school security upgrade at the entrance is mostly done. We're using it, but there's some additional door work that needs to be done. So we'd like a little more time to do that, and I believe the way this is structured, it gives us 2 years additional for that. The Indian Neck, similar project that we had planned for Indian Neck. Due to COVID, we never quite got that off the ground, but in a way, the high school provided an opportunity for us to kind of test the waters on that, on security upgrades, and we'll be incorporating what we learned into the new project. We would like an additional time. We consider that to be an important expenditure. Nowadays, everyone is sensitive to security matters. The asbestos abatement and Indian Act, it's all been done. The 26,000 is those are residual monies that are left after we completed the project. The architectural study at the sports complex, our architects Antonazzi did us a favor in this. They took a quick look at it and realized that due to wetlands, we wouldn't be able to build a structure where we wanted to, so that project just is not something that can be accomplished, so we would like to redesignate those funds. And then the following two, the door replacements and the code compliance, are just, there were allocations that the clock ran out on those, but we still need to do that type of work, so we would like to redesignate and extend those.
So why don't I recap this for the audience. So we'd be the from transfer is from Branford High School entrance security upgrade 30,498. From the Indian Neck School entrance security upgrade 101,185. The asbestos abatement 26,000, 75,000. The architectural study for the sports complex 15,000. System-wide doors of 25,583 and code compliance 1,850, and those would be moved or redesignated again to the Branford High School. So that would stay there, 30,498. The Indian Neck School would again be at 101,185. The system-wide doors would be combined into 69,658, and the code compliance would stand again on its own of $1,850 for a total of $203,192.17. So that's the request. The questions from Don or Joe with regards to this request?
And I just wondered, Don, when you find that an appropriation of 15,000, can't be used because of wetlands, where would that go? I mean, is that in the entrance security upgraded?
That's in the
No.
door replacement.
That is correct. We're wrapping that into door replacements.
Oh, it's down here?
Yeah. So if you look, those three, the 26,000, the 15,000, and the 28,000, they're combined into the 69,000.
Oh, I
So they're
get you.
moving everything into door
Okay.
replacements.
I get it. All right, I got it.
So that's the pathway. Okay, Harry, any questions? Pam? Jeff?
Good, Joe.
Somebody want to move this?
I'll move it.
I'll second it.
Moved by Jeff, seconded by Pam. Additional discussion? All in favor?
All right.
Thank you.
Thank you very much.
Next is item number 11, pursuant to the capital projects ordinance, consider to appropriate, approve the attached list of funds 700, 720, and 730 transfers organized by RTM committee and funds. And again, this is with the cover letter of Jim's note, which is asking for either to combine or to extend, or to, I think we had a few here that were closeouts. So why don't I go over these, and then Jim, you can provide comment. Pretty extensive list. So I'll do it by committee and then by fund. And the first one is Administrative Committee, Capital Fund, 700, and,
Sure. Over there.
the first one is to new tax financial system, and the $446, that would be combined. Mute the accounting module at $2,681. That would be, again, transfer combined. TCM, what's TCM?
Tyler, Contact Manager.
Part of the financial system.
Part of the financial system, $1,804. That would transfer extend, or I'm trying to transfer and combine. And the online permitting system would be extended, $17,384. The body cameras for the police, $340, extended, and the technology acquisition phone system of $36 would also be extended. That total is $22,693, and they'd be moved into various projects. The financial system upgrade of $4,932. The online permitting software of $17,384. The body cameras would stay at $340, and the technology acquisition phone system, $36.85. What are you going to buy for $36.85?
Just keeps using the money.
Yeah.
What's that?
Yeah, I mean, basically, you should buy like parts or something for it. I mean, it has been getting very low, and
It's actually a different dollar amount than the first time we came to you, because she has used money since then. That's why it's low. I believe in the past couple of months, she used a couple $1,000s.
Okay. So why don't we vote on these by committee? Is that what we-
yeah, 'cause it,
Yeah.
Well,
Yeah, go ahead.
what may make your life easier is because everyone has a copy is then. maybe
Waive the reading.
Just do, waive the reading and just do it by committee possibly might work better for you.
Okay, I'll consider that. So this, $22,693.25. Somebody want to move this?
I'll move it, Joe.
Moved and seconded by Harry. Questions by Charlie? No?
Pass.
You good? All in favor?
Aye.
Aye. Okay, the second one is Public Services Committee, again, capital, 700 fund. There's various projects in here, from town clerk vaults to exterior work on the town hall, to transfer station building repairs of $145,000, center decorative lights of $20,000, paving of $57,000, transfer station improvements, another fund for $136,000, and Rose Hill Pent Road sewer extension of $1,000,001. And so all of these projects are in the 700, and they are, the vintage on these, Jim, is, where's the vintage code on these?
Well, actually, the oldest one I'm looking at looks like it's 2012, which would be the,
So the first year is 12, 11, but those are the fiscal years?
Yep.
yes.
So the various fiscal years of projects that the board and the RTM has approved that have not been expended to date. the suggestion is these would be rolled into and combined. All of these are either extended or transferred and combined into similar projects. So the scopes are not changing on these, they're just combining in many instances. Are there any new projects in here?
Yeah, if you're combining a project, you're combining it with a project that might have an existing scope. So you might take 3 projects and combining them. Sometimes they do have the same scope, and then if you're extending them, you're giving it a new project number as well, which then gives it more life under the ordinance. That makes sense.
Yeah, it's a little more complicated than the Board of Ed request.
Well, it's a matter of scale and projects, yeah. Scale.
So, and we are going to be doing the Rose Hill and Pent Hill sewer extension. Is that correct, Selectman? First Selectman Cosgrove?
Yeah.
Okay.
We probably will be discussing that at the end of the meeting.
Okay.
Updating.
So that is taking $1,698,413 and essentially recycling them into new projects equaling $1,698,413,000. In addition to that, there's town hall gutters of $98,000, capital outlays from Riverview of $3,510, for a total of $101,000, and they're actually getting closed out to the general fund of $98,200, and then $35,10 going into the sewer fund. So that's the funds. That's the public services request for capital reallocation, I'll call it. You have questions on that?
I got a question, Joe.
Go ahead,
And
Jeff.
maybe this is directed to Jim or Jamie. What kind of improvements are you doing at the transfer station? I know there's been some ongoing activities over the past years. And as a visual, as I drive by there after hours, I noticed one of the overhead doors is not closed on a regular basis. I'm assuming it's in disrepair. Can you just explain what type of things are going to be going on up there?
Yeah, so there have been some ongoing issues with the door that you see, that's why it's been open. We actually, as you see, there were a number of projects that were funded. We are gonna combine that all as one project. And
So all those different
yes,
categories
so
go
we're-
into that?
Yeah, so we're
Okay.
planning on meeting out there with staff and prioritize the project.
Thank you.
And Lisa, what has to be done with the vault? Are you still trying to fix that?
So the project halted because of the windows being blocked up and having a load-bearing issue on the floor and probate below, so that kind of stopped the project. But what we're intending to do moving forward is to work on the HVAC items. All the mechanicals need to be moved to the exterior of the vault, or actually to the office side of the vault, so no sparking mechanisms can be in the vault, as well as removing the water sprinkler systems and replacing it with a halon or a non-water-based system.
Okay, thanks. Charlie, you got a
I
question?
was gonna ask the same thing. We had 112,000 in there for the vault that we're not using.
Well, it's getting recycled.
It's gonna be
So she's
allocated.
gonna reallocate it now.
Repurpose.
It's gonna be used also for the vault?
Correct. And then there is a small amount of dollars being allocated toward additional shelving and storage.
Okay. Yeah, I see it.
Okay. Other questions on the public services capital funds? Harry? You good? Okay, somebody want to move this?
So moved. Second.
Moved and seconded, discussion. All in favor?
Aye.
Next one is the municipal facilities fund. That still comes under public services, Jim?
Yes, yeah.
All right, so Fund 720, there's various projects here, police department, exterior stucco and town hall. Looks like the front steps are in a couple places here. Transfer station roof replacement and transfer station vinyl siding replacement. Various projects of either extending or transferring and combining for a total of $387,675. And moving into police department improvements, $79,000. Town hall front steps, $13,000. Town hall generator install, $73,000. And transfer station improvements, $121,000 for a total of $287,000. We also have the senior center exterior building repairs to transfer to the general fund, so that's a closeout of $8,394,000. On the next page, we're looking at Linden Avenue and shoreline stabilization, which is an extension of $1,071,412. So that'll round out the rest of the Public Services Committee oversight projects. Any questions on those that we need to ask Jamie or Jim on? So it was the municipal facilities, basically, as well as the infrastructure enhancement fund. With no questions.
I'll move it, Joe.
Jeff has moved it.
I'll second.
Seconded by Pam. Discussion. All in favor?
Aye.
Okay. Rules and ordinance, we have various projects totaling $252,125. They are all extended, and request to extend and or combine into 3 projects: natural resource inventory at $20,000, generator restoration project, which is, where is that at? Is that town hall? Where's the generator?
No, that's for the sewer system.
Sewer
For
system.
the sewer system? So the sewer system generator, that's the entire system, or that's just the one at the plant?
He has the program where he changes them out at the various pump stations.
Okay. That's $78,766, and manhole and sewer line repair of $153,359, for a total of $252,125.77. Do we have questions on this request?
I'll move it, Joe.
Moved by Jeff,
Second.
second by Harry. Discussion? All in favor?
Aye.
Okay. Thank you. And then Ways and Means, we have a request to move to extend Episcopal Preserve improvements to $250,250.05 to a new project, which is entitled, has the same title, Episcopal Preserve improvements, $250.05. Charlie, got questions on that one?
It's got the same from and to number.
Yeah, it's
Yeah,
also
well,
doing is extending
The
it.
project number is 22, so basically, the way this process sort of drives is it goes by the project number, right? So that's how you know how old it is. So when we extend a project, you know, rather than try to keep track of what ones did we extend, not extend, right? We give it a new number. So that new number resets the clock on it, essentially. So that's why. So basically, by giving it a 22 project, it has more years before that look-back period per the ordinance applies. And then in some of them, as we said earlier, as you saw throughout tonight, we're combining them. If you notice, like the amount of real estate on the from side is less than the amount of real estate on the to side, and that reflects the projects that are being combined.
Okay, $250 going once.
Move it.
Moved by Jeff. Second by Harry.
Think of an easy to do.
Discussion. All in favor?
Aye.
Okay, thank you. Let's see. Okay, item number 12 is to consider and if appropriate, approve a transfer request from the first selectman for consulting services related to athletic field improvements as follows. From fund balance transfer $400,000 to consulting services field study $400,000, and to consider the resolution which is resolved that the Board of Finance recommends to the RTM an increase in the ARPA fund budget from $2,327,000 to $2,727,000. This appropriation will be for the consulting services related to Walsh Intermediate Athletic field improvements and the development of the strategic plan for athletic facilities town-wide. This will be funded through an appropriation from the ARPA fund balance. Jamie and Alex, welcome.
Okay, thank you, Joe, and I believe the board also has the letter that I submitted, but I'll just give you a quick overview of what this project entails, as well as the process we went through. So over the number of years, I've had discussions and been approached by, as I stated, a number of sports organizations, coaches, residents, and myself and Alex as well. I think a couple of years ago, right prior to the pandemic, they even had a council that was formed to look at the needs and address our sports facilities. Where the town of Branford certainly has a number of facilities throughout town. I think there's a number of factors, but probably over the years are a little bit inadequate for today's level of play and the amount of play. I think there's a change in demographics, a change in sports, a change in the sport trends, change in terms of the amount of play that some of these sports are in terms of year-round or multiple seasons. So that has all put a greater demand on what we do have, as well as I said, with the change in the trends in sports, maybe we don't have enough of the facilities or types of fields that we need. So, and I would say also through the budget process, I think Alex has done the best in terms of trying to meet that demand, but it was really been through, I would say, more of a piecemeal approach, right? So we try to make fields where we can. Last couple of seasons they've been playing, setting up fields, lacrosse fields down at Young's Pond, which certainly is not designed or built to be a sports field, right? And we've made the best to make it work, done the best to make it work. So really the thought was, you know what, let's take a comprehensive approach and look at this, and really what is the need in the community, where are the trends going, and how do we establish a strategic plan to meet not only the current demands, but also what we can see the projected needs of the future are for the town of Branford. So we went through a process where the town issued an RFQ, RFP. We received proposals from multiple firms. We interviewed a few of these firms, and we also asked some representatives from the school district, as well as some various sports organizations to be part of this process to help
in this vetting process to ensure that we were going through not only a process that would ultimately have the outcome of what we were looking to do, produce a product that we did, but also select a quality firm. And through that process, we decided that BL was the firm that we felt could best address the needs or what we were asking for. I forwarded you the proposal. If you see the proposal, it is referred to as 2 phases, phase 1 and phase 2, but these are really 2 separate tasks, I would say, because they will be performed concurrently. But phase 1 or task 1 is really focused at Walsh Intermediate School. As you know, there is a current footprint there of a field and a softball field and an old baseball field down in the back. You see that there's a lot of potential there to really address and take immediate needs of many of not only the school district, the town programs, but our local sports organizations can really utilize those fields. So we want to break this out as a project really focused on that. You may ask, well, why is the town essentially taking the lead on this? I think it kind of goes in line with how we approached even with the Walsh Intermediate School. You may recall those who were part of that process and were funding it. Certainly it was primarily a school project, and they built a school to their ed spec. However, when we came to such assets as the pool, the gymnasium, and now the new auditorium that was built there, we also have to look at these. These are community assets. These will be meeting the needs of the community, even outside of what the school district's needs are. So where it's primarily under the control of school district, and it has to meet their programmatic needs, which they utilize easily 10 months out of the year, 9 to 10 months out of the year, 10 hours a day if you're given the school day, plus they're after school. But there is still time that other organizations, the town, would be utilizing those facilities. So we see that as a standalone project. The second phase of this project, or task, is really to develop that strategic plan for our facilities. And that would include a lot of public outreach, surveys, assessing our current facilities to see what level of play they could sustain, what types of improvements would need to be made to really meet the needs. And this would be a little broader too, in terms of it's not just the organized sports organizations that would be part of this public outreach, as well as developing a plan to meet the needs. There's a lot of recreational sports or activities that have really grown in this town. I'm sure you know pickleball being probably number one. But there's another example where the Alex and the rec department has tried to address and meet that demand. They're taking a lot of the tennis courts and relining them and to accommodate the pickleball play. But there's also still a lot of tennis play that's happening. So there's just that's an example of, okay, well, maybe it's time we really look at building the facilities to really meet the needs. So it's not just limited to organized sports or youth sports. It's really, the second phase is really focused on community-wide strategic plan to meet the recreational and organizational sports needs of the community.
I'd just like to interject, we haven't really looked at something like this since back in the 1950s, to be quite honest, a comprehensive look, and built, as Jamie mentioned, sports are changing, ages are changing,
even though our demographics are changing, what's happening is kids are starting sports literally at 3 years old, where back in the 60s, we started at 9. So it's a lot different, and there's more sports. Lacrosse has been, Jimmy mentioned about Young's Pond before. Young's Pond, we just had to take space at the time when the middle school was being built and doing their project, that we had to find any type of space. We've been able to do that, but most of our fields have been, like you said, we have a program that we've been pushing forward, but again, we've had a lot of issues at some of those sites over the years, and I keep saying the magic's going to run out at some point. We really didn't need to take a great look, and this time was we're taking a look at this, you know, at the middle school as phase number 1, number 2. Every other property that we have, open space, and we have coming up. Pickleball is huge. We had pickleballer deals, situations this morning with trying to get space where we have, not only did we line the tennis courts with pickleball courts, we have 8 courts there. We also have 8 courts at Veterans Park we just fixed, and they're coming inside now. We have less than Snike going on, so it really has been an explosion in that. So taking a look at other facilities, are we utilizing them right? Are we having the right sports there? Most of them are all purpose fields, so we're one time a year we're playing football on it, the next time we're playing lacrosse on it. And what's happening with sports too, which we're finding out, is everything. Mr. Carbone is here tonight, he can tell you about that. All sports are going full year, which it's not like where we thought lacrosse was only this time of the season specifically. They're going, every sport is going full year now, or full year round. And I think you said the school's 10 months. I would say pretty much the only months that we might not have something going on there is January and February, maybe, you know, for the most part. But we're going 10 months a year on recreational ends at nighttime.
So I see that there's 2 scopes really. That phase 1 for Walsh has got its entire scope, which also includes the cost estimates and permitting, and construction administration. So it seems like it points towards obviously a larger appropriation. And likewise for the phase 2, which is really more of a cost-benefit analysis and data collection and stakeholder interview and that sort of thing. It seems like it's obviously a different scope, but both of them lead to the next question, which the board is kind of has tried to caution itself in prior years, is what does this mean as far as the projects, and what are we looking at as far as allocation of dollars in order to get this work done, and where might those monies come from?
Yeah, so with the Walsh project, you read that survey, this is really a designing all the way through a construction administration of a project at that facility. You know, again, I always caution to, you know, we don't want to anchor ourselves to a number, but certainly you know, if it was to be an all-purpose field, as with lighting and other improvements, like I said, currently is a softball field, and the last time they looked at it, there was a look about a little over a year ago. The Board of Education had engaged a firm to do just a concept, and what they laid out was an artificial all-purpose field, redoing the softball field, and a 60-foot diamond, right? And and again, I forget, they did do a cost estimate, and that was probably, $4 million, $6 million? It's a multi-million-dollar project. But there's the point why we want to do the engagement of all the communities. There's not a need for a 60-foot diamond from what we've, you know, engaging the sports organizations. So that's where we want to be in this process. We want to ensure that we're doing the outreach and really engaging the stakeholders to ensure where we invest our money or build a project. It is really to meet not only the current, looking at the current demand, but also having a better understanding of where the trends are going.
So for the Walsh Intermediate, is there a rough estimate on that particular project?
as I said, I mean, that's what that it will be a multi-million-dollar project. In terms of where it stands, I think that all depends on the level of design, whether it's it ends up being an artificial turf, the lighting. But again, it's, you know, you're probably looking at, let's say, in that $5 to $7 million range. It could realistically be there. I would say a year or 2 years ago, we would probably say 4, right? But what we've seen, where things are going, I'd rather have the board take a very, in the town, a very conservative approach in terms of these budgets. Because I mean, you know, we've been here before where we put a number on a project or just a placeholder, and the placeholder doesn't hold.
So would this be combining ARPA, would this be using ARPA funds?
For the project itself, I
Yeah.
think we would look at identifying when we have an idea of where, and I think working with the board and the finance director, Jim Finch, I think we would determine at that point on how this should be funded, whether it's a combination of funds.
So might the Board of Ed be able to contribute some of their
They
ARPA
might,
dollars on this?
and I think we'll also be, at the time, we'll be closing out the appropriation for the school project, and at that time, we'll do, in the next couple of months, we'll reconcile that project in terms of where that lands, in terms of the appropriation, and what was, also, we have to look, you know, minus out the state reimbursement, but, you know, when we funded that project, we did not, our bond authorization, I think we even stated in the authorization that it wasn't going to be fully bonded. We had a cap of 58.5 million, I believe we said.
What's the unexpended on that project now?
Actually, I don't know off the top of my head. Don, do you guys know what the on Walsh is?
It is, that will be reconciled within, I expect, within the next month. But it is, again, I'll say it is several million under what was appropriated.
Yeah, right.
But keep in mind, we didn't, the several million, we also have to still see what will be our share.
Yeah.
So if I say it's going to, well, we're 6 million under, but we also have to see how much of that is inclusive of our reimbursement.
Yeah, Joe, you almost have to look at, well, what's the net cash? So it's similar like the Harbor Street, we were fine on the budget, but then when you look at what the net cash is, that's what we really have to look at with that.
Right.
Joe, a couple
Eric?
of questions.
Sure.
B&L, are they a Connecticut firm or national firm?
BL, yeah,
BL?
they're a national firm. They have offices throughout the country, but they're local here in Connecticut.
Local.
They have, yes, they do.
And do they have any architectural engineering people on their staff?
Yes, that's what they are, yes,
Because
yeah.
that's the key.
Yes,
I mean,
that's what they.
the conceptual
yeah,
plan can
yeah.
be beautiful.
No,
But then
No,
can't build it.
they're in the full design,
Right.
they'll do the full.
So
full
that'll
work.
be compacted into the program, the report, in terms of
Yeah,
their
so if you-
evaluating the property.
Right.
You know, it's like what happened with the Board of Education. They went over it, he was gonna do an addition, and Anthony looked at it and said, it's wetlands, you can't do it, you know, so, you know, those are the things you have to look at, especially when you're talking recreation, you know, you need
Yeah.
use of land.
No, they're a very reputable firm with a lot of disciplines within their
They're
office.
deep.
Yes.
Okay.
Okay, so that portion is 169,000. As far as the next piece of it is, again, all the other town fields?
Yeah, so they will evaluate and assess, like I said, all of our current facilities. They'll match that up to what we have, what our needs are, where the demands are, and develop a plan to begin, you know, addressing those, what is required to address those things. So we would have essentially a strategic plan to ultimately get to a point where we can adequately meet the demands.
I think I counted like 18 sites, is that what it is, Alex?
Yeah.
I mean, they'll look at all of them.
18 sites, so that's another couple $1 million there?
No, well, I mean, they're gonna look at these facilities, right? So depending on they're gonna first do analysis, okay, what is what is the demand? What is the need there? There's, different facilities can handle different level of play and the amount of play. So, maybe for a youth soccer, right? The current facilities that we have, perhaps, we have enough to meet that demand and the growth. There's enough fields. But once you start to get up to, or let's say baseball, right? There's within baseball, there's a lot of different levels now and diamond sizes to meet the different levels of play. So where we may have a number of Little League fields, and that's even changing in terms of what the dimensions are that Little League wants for their fields. When we built these fields, 20, 30 plus years ago, the dimensions were different. And there was just a standard Little League field. Now you have a 50-70 diamond, right? You have a 60 diamond, a 90-foot diamond. So that's where they'll look at, okay, well, what is required? What do you have in town currently in your inventory? Where are the gaps? And how can we go in there to address those gaps?
I just want to make one point too, is I obviously go to a lot of games in a lot of towns over the years, and we were number one back in '96. We had a sports council. We were able to have the all-purpose facility at the high school. There was a lot of people that were fighting us at the time, even coaches at the time, and now it's one of the best things that ever happened at the high school. So, when I go to other towns just on the shoreline, we were the first on the shoreline, first. When I go to other shoreline towns now, anywhere I go, it's just they've got multiple turf fields and lights, and it's just getting to the point where we have to play like at a Young's Pond. We can't get teams to come here to play, and I'm just talking on the youth groups. Soccer, just to give you an example, when the soccer season comes, we have JV teams for both girls and boys at the high school, and they have to go to our town fields, like over at Flax Mill or Vet. Sometimes they can't go there because it might be too wet on the day, but they'll go to. So they're getting multiple use. So it's kind of hard. It's not a lot of parking up there for the buses. I'm just giving you some areas that happen in baseball. Now we've expanded. There's 50, 70 now with Little League. So we're trying to keep making these fields and areas to go, but we're kind of running out of that. So I mean, that's why I think we're first directed towards that number one scope of work, and then looking at everything else. And to me, I think it was, I think the first selectman said it, let's take a look at what we have, what we have now, what the needs of the schools are, what our needs are, what other needs of the community are, and pickleball being one of them. It's really big. So I don't want to say band-aiding, but we're kind of just making areas where we can for what we have right now, kind of get locked in that. But I just think that it's time for us to hopefully move in that direction. We can't really put a number on it, but obviously it's a multi-million-dollar project somewhere in the future down the road. So.
Jamie, what's the timing on these studies?
They would commence as soon as funding is in place, so they would start this winter.
Joe, I had a couple questions.
Sure, Jeff.
So, Alex, have we ignored this project for a long time?
You said
Well, have we ignored looking at the fields and all these sports?
No, I don't think we really have.
Because you said in the beginning we were number one, and now it seems like we're lagging compared to other communities. So, did we take our eye off the ball, and now it's snowballed into a bigger project?
Well, I think we've.
And I understand there's a need out there. I'm not disagreeing with your presentation and the need. It's just,
There's been talk about it. I think I've been preaching that for 30 years.
I'm not saying you haven't.
As I've been director, and I have documentation to back that up on saying what we should do and where we should go, but we were able to get Foot Park, that helped.
That's wonderful, and
We were able to
I
get
agree.
Branford Hills,
Yeah.
that helped. But it's just that there's.
What's
just
that
a ton
Branford
of
Hills,
games.
a baseball field?
Actually, they played youth football, they played flag football, and it actually turned into a pretty good field.
Nice.
Because we had put irrigation there, so that was a home field. They'd rather be on the turf somewhere, but they couldn't because youth football was there. Younger
Right.
age kids, and they were up at Branford Hills, so.
So refresh my memory on WIS. So there's a softball field down back inside the track. Are we talking the field that's up front?
There's a softball field up front, and then in the back, that's kind of, used to be, when it was like a soccer field back in the day.
Right.
Then it became lacrosse, and then it became youth football.
So that'll encompass that whole area?
Yeah, and then in the back, there was a baseball field that wasn't able to be a 60, 90. It would have been actually perfect for probably 57 right now, 50, 70 at this point, but.
Okay.
But again, if we're gonna do a project at a school, because of, as I was saying, that although this is a community asset, but I also wanna be responsible with our dollars and where we're deploying them. So if we're putting it into a facility that's gonna be at a school location, I think that we have to address the districts or the schools' programmatic needs, right? I don't want, we shouldn't be building a field that the team that goes to that school cannot use.
Correct.
Right, And
No,
it's
we have to have,
yeah.
we can't have tunnel vision. We have to have
Right.
our eyes wide open.
And I think to your question is, have we been ignoring this? I don't think the town has ignored from where we are. We're in the, as Alex said, in the 90s, and to where this time. I think the town has always been pretty responsible in terms of addressing our infrastructure needs, our facility needs, but we also do it in a way where we would be sensitive to the tax burden, right, to the impact on.
I understand that position.
So over that time, I think, and that's where I think we fell into a routine of trying to, again, maybe, piecemeal it. So when, a group comes to us and says, hey, we need to do this, or we need somewhere to play, we're trying to put something together, but it's not something that could really meet competitive play.
Right.
It's just
And
really.
I realize Alex
Yeah.
has juggled the ball over the years with maintenance and all that type of stuff in play, and maybe poor choice of words, or we took our eye off the ball.
Yeah.
I'm not sure, but.
Yeah, I mean, a great example is like even this, what's built back up to is the travel team. So now you have travel sports and everything, you'll have recreational play, and then you'll have travel. So all those sports have multiplied.
Correct.
And so just an example, we talk about a 50, 70 baseball field right now. They're having to play all their games away. We can give them practice on a part of the field. We're actually building one right now to try to make it for next spring,
Right.
just to give them something. So those type of things are kind of happening, and I think we did the best we can, but now it's catching up to us a little bit.
Absolutely. No, and I understand. So my last question, with Phase 1 at WIS, has the Board of Ed been asked to put some of their ARPA money into this 169?
Well, from what I think, is Don still here? I think we looked into their ESSER money, or their ARPA money, and I think their reading of it, that this would not be an eligible expense.
That is correct.
Okay, so
And
we
they
did
have
look at
other
it. Okay.
communities that looked into it, but, and it's come
It
back,
doesn't
it's
fit.
not, doesn't.
That's
fit.
fine. Thank you.
But I did approach them.
Other questions?
So maybe that answered the question I was going to ask you, Jamie, but do the ARPA guidelines allow the town to use money for a study for recreational needs?
Well, we took the
Standard allowance.
standard allowance approach, so we received under $10 million, so we can utilize our funds to go our general government services, or what we typically do fund. So we typically do fund these studies, so we can utilize the ARPA dollars for this.
And later on, like if you can combine town funds with ARPA funds for another project? Like if you're gonna make the field?
You can utilize ARPA.
That's all right, you can blend the
Yeah,
fund?
because the way the dollar amount we utilized or received, and we're just declaring a standard allowance.
So it's allowable for general government purposes, which includes
Yeah.
education, includes municipal services, et cetera,
Okay,
capital items.
had to ask.
Yeah, sure. Other questions?
Yeah.
Aaron?
I believe they will not be giving you estimated operating costs. If they come in and say, here's the plan, or you develop the final plan, at the same time, we would have to look at the capital expenditure for this, and then the increased operating costs for these fields and lighting, and so we're gonna have more operating expenses.
Yeah, actually, we did
From
ask
Alex.
them we did ask them to prepare that.
They're preparing all those.
Yeah,
It's in this, the scope is pretty
yeah,
in-depth, so.
Good.
that is, even with the town-wide, looking at, what the cost would
Okay, other
One last
questions?
question, Joe.
Sure.
Is there a separate committee for this project, or
be. No, so.
other than yourselves? and
Yeah, we
the
just,
Board
like
of
I
Ed?
said, it was just the town issued the RFP through engineering we drafted an RFP. Myself, I asked Joe
No, Jay, maybe
Carbone
I
and.
misrepresent. Is there somebody from baseball or something?
Yeah, so I asked, yes, so there would be a representative from baseball, attended, all the sports.
Okay,
I think we had,
Okay.
baseball, lacrosse, soccer, football.
Right, a wide,
and-
All
and
the
baseball.
concerns. Okay, good.
Yeah.
I just,
a wide array of
Thank
group, and we've been working on this since almost a year now.
Right. And again, like when you go through and you read for the phase 2 for the assessment, there's a lot of public, it's going to be a lot of public outreach, stakeholder interviews, meetings with the different groups.
thank you.
Yes, sir, they'll all have an opportunity multiple times to have input.
Okay. Other questions?
I'll move it, Joe.
Moved by Jeff,
I'll second.
seconded by Charlie. Additional discussion? All in favor?
Aye.
Thank you.
Thank you.
Okay. Number 13 is to discussion regarding ARPA fund allocations, and if appropriate, approve the following resolution. And I will draft the resolution. And resolve that the Board of Finance acknowledges the Branford community's desire to use a portion of the American Rescue Plan allocation to assist nonprofit organizations within the town that have suffered negative impacts as a result of the pandemic. Therefore, the Board of Finance hereby declares its intent to reserve $425,000 of the town's $8,257,000 allocation, and resolved that the Board of Finance requests the first selectman to research and provide administrative and distribution options to the board with regards to local nonprofit organizations negatively impacted by the pandemic. And as Jim will explain, we've had, in the past few meetings, we've had discussion with regards to ARPA funds, and we did have an allocation to BACA as well as the Chamber of Commerce at one of the prior meetings, and this would take the next step as far as providing some relief to some of the nonprofits. In discussion with Jamie and Jim, we had talked about the use of possibly the Branford Community Foundation and/or for some purposes with regards to vetting of some of the projects and/or using some of their administrative capabilities. With that, Jim, would you like to expand on that?
Well, you did a very good job, so there's probably not too much to add. And again, this was helping us try to develop a framework for how we were going to allocate the dollars. I know initially, I think there was some concerns that the town may be oversubscribed in some of the nonprofit areas. We pointed out that, as it related to the conversation on the earlier item, that by doing the standard allowance, and the uses were strikingly similar to all of the uses that we do in our general fund budget, either in terms of general operating costs or even as a pay-as-you-go capital. And so, but we did recognize there was a desire to do something for nonprofits, and so we thought that we would allocate 5% for that. There was some discussion about it. There wasn't universal agreement on how to distribute it, but I think in some of our conversations, it was important for the board and the town to just kind of basically declare that, you know, we still want to allocate something to nonprofits. Let's sort of define the size of that bag, and in this case, it would be $425,000. And then let's work on a distribution channel, which is, as Joe pointed out. And so there's two resolutions are one, to kind of basically what's our intent with nonprofits, and two, what is the what might be a distribution strategy that is suitable, you know, that's politically doable and financially feasible, I guess you might say. Every community is a little bit different. Every community handles it differently, but the sense here is that that Branford wants to have a lot of local control over the decisions that are made. So that's something we'll have to take into account when we respond to the second resolution in terms of providing distribution options.
Yeah, and so the thought is that, you know, if we, instead of having the vetting process and selection process solely on the shoulders of the town hall administrative, that we might use some outside sources, whether that's the foundation or some of the consultants that they're utilizing, that would somehow come back to the Board of Finance as far as an authorization, and then move on to the RTM. So we would be consistent with our, you know, budgetary and appropriation process that we do. And other towns may handle it differently, but they also have a different form of government or process. So this would be consistent with our process. But the second resolution, as Jim pointed out, we kind of direct Jim and Jamie and his staff to kind of look at the options, come back to us and say, this is how we think it can work. So, Jamie, any expansion on that, or?
No, Joe, I think you and Jim really captured it, and, you know, I think just really to get the board's commitment, and really, it's really for also the community to realize, as Jim, to use his phrase, size of the bag. I think that's the first step, and then we can begin those discussions with, like I said, either the foundation or some other consulting group that has the experience, the infrastructure to take in those grants, vet them, and solicit. But the ultimate distribution will still be from the town to the organizations.
Questions from the board? Pretty straightforward. Thank you. Thanks, Jim, for putting everything together on that. Okay, so we have two recommended resolutions for the board to consider, which I've read.
Move the first one.
Second.
Motion's been made and seconded for the intent of $425,000, as I read previously. Is there additional discussion? All in favor?
Aye.
Thank you.
Move the second.
Move the second by Harry,
Second.
seconded by Jeff. Discussion? All in favor?
Aye.
Thank you. Okay, item number 14 is to consider a request from the
Excuse me,
finance.
Chairman Mooney,
Yes.
can we circle back to number 12, please? Jeff and Charlie, Jeff made the motion and Charlie seconded it, but I don't believe the resolution was read for number 12.
Oh, okay. I shall do it then.
Thank you.
So you want us to vote on it again?
I think so.
Okay. So for item number 12, which was the extended discussion with regards to the transfer from fund balance of $400,000 into consulting services field study of $400,000. The resolution proposed is resolved that the Board of Finance recommends to the RTM an increase in the ARPA budget from $2,327,000 to $2,727,000. This appropriation will be for the consulting services related to Walsh Intermediate athletic field improvements and development of a strategic plan for athletic facilities town-wide. This will be funded through an appropriation of ARPA fund balance. So that was the resolution, and
I'll move it.
moved by Jeff,
I'll second it.
seconded by Harry.
Oh,
I'm sorry, Charlie.
that's all right.
Oh, give it a
Charlie
Charlie.
jumped in on this one. Is there discussion? All in favor?
Aye.
All right, are you okay now?
Thank you.
Okay. Very good. Now, number 14, we are to consider a request from the finance director to recommend that the Board of Finance appoint the accounting firm of Clifton Larson Allen LLP, formerly Bloom Shapiro, to perform the annual audit for the fiscal year ended June 30th, 2022, for a proposed fee of $73,500.
Mr. Chairman, I have a few comments before we move to vote on this.
Okay,
Okay.
let me just, before I turn it over to you, Harry, I'll
Okay.
just make a comment that Jim has provided a letter with regards to his finding and some of the background of the audit report. We are, as a board, I think collectively not happy that, in fact, the audit for 2021 has not been delivered through some extenuating circumstances. But I would like to appoint an auditor for this 2022 in order to not delay the process any further. Harry, go ahead.
Yeah. Over the last year and a half, I've had in-person telephonic discussions with Jim regarding auditing, et cetera. And really, it's more a state of the union regarding auditors. There are becoming less auditing firms that do government audits. And as you can see, we had Bloom Shapiro that merged with this firm. Their pricing is fair, the 73.5, in terms of what they're looking for, you know, for your current audit. And in speaking to Jim, you know, if you talk to, every town is really different in terms of how they handle their finances, what they do, what problems they encounter, and that affects an audit. So you can't go, okay, here's a town with our population, and all of a sudden there are 110,000, and maybe another one's 55, and it's all over the place. So it's difficult because there isn't a great variety of firms out there to go to. So in my discussions with Jim, I just came to the conclusion, you know, for this year, we've got to do what we have to do. But I think if we start looking, we're going to find exactly what Jim has discussed with me. There's a difficulty, you know. And so that's commentary.
Thank you. No, it's, the landscape has changed, and I think the group the team that's here locally and working with Catherine and Jim and the various departments that, you know, are pretty experienced. They seem to do good field work and worked in particularly with the issues we had at the tax department over the past couple of years. And now I think, as Jim has described to me too, that some of the time, because this is a national firm now, it's that the quality control and other types of checks and balances go out of state after the work's done. So there are some delays that need to be worked through, and there was probably some additional scrutiny that they wanted to provide based on what they found, again, in prior years with the tax department. So they are recommending some changes with regards to internal control and that sort of thing. But at the end of the day, it hasn't been delivered yet. It's been delivered in electronic form. It's 109 pages, which, we want to be able to have a good presentation for and understand it. At the end of the day, we're fortunate that we are in very good financial shape, in part due to this board and the RTM, as well as the finance department and the first selectman's office. But with that, Jim, if you're asking for us to approve the auditors, anything else you'd like to explain beyond your letter that you provided to us?
Yeah, no, I would just agree with some of the comments that have been made, and this environment's been going on for over a year now, and it's not unique to my colleagues as well. And so I'm grateful that the board kind of understands the environment that we're in.
It's way under.
And that, and that you're considering reappointing CLA so that at least we could start moving forward, probably at this rate, probably in January. And I did reach out to them and inform them that, we may be looking at having a special meeting, and they said, they would work with us to present the audit. So that's the other piece of this, that, we are a little bit out of sequence, but I think our conditions dictate us to do so.
Yeah. Thanks, Jim. Charlie?
Just a comment, I think 9.5% is pretty high, especially when they have all of our work papers from the past years. Just a comment.
Yeah, I mean, and it's not, there was an area town who did an RFP, they got no responses. And they reached out to their previous auditor and basically said, can you give us a proposal to do it? And it was actually twice what they were paying. So again, yeah, when you look at the 956, at a first blush it is high, and then sometimes you say, well, what's your reference point? And so when you see another community seeing it double, I feel a little better about the 956, honestly. So.
Okay, other comments or questions? Pam, you're good?
I'll move it, Joe.
Moved by Jeff,
Second.
second by Pam. Additional discussion? All in favor?
Aye.
All right, thank you. Next is item number 15, to consider and if appropriate, approve and adopt the attached 2023 meeting schedule. And
I'll move it.
Jeff has made a motion to move the schedule.
No, second.
Seconded by Charlie. Is there discussion? Lisa, any comments on this? You've done research?
I have no comment.
Okey-doke. All in favor?
Aye.
Aye. Move on that one, and then for the next hour, we'll have item number 16, to consider, to hear an update from the first selectman and finance director on potential financial commitments. Jamie?
Sure. Yeah, so we thought it was a good idea. We recognize it's getting late, but we just wanted to update the board on, a number of projects that are either on the horizon, perhaps in the works, or being considered. Although there's not a request at this time for any of these projects, we just wanted to keep the board and the public apprised of what the town is working on. So you may recall a couple budget cycles ago, or last budget, we had a number of projects, smaller projects at the police department that we consolidated all under one project. We closed out and actually put some money aside to bring an architect on to do a feasibility study of the facility. There were a number of issues that needed to be addressed. Some have to do with the current condition of the building, and others have to do with just really the change in the department over the years in terms of staffing, demographics.
So where the project is really focused mostly on the lower level, it's not, focused on the entire building, but we did have a firm that was engaged. They're doing a feasibility study. We thought it was, given not necessarily the dollar size of the project, but really the complexity of the project, because it will be a phased project with a police station that is active 24/7. And as you are fully aware, the site is tight. There's a lot of other activity that occurs on that site. So we thought it was prudent to bring on a construction manager to kind of assist not only with the design, development, construction, understanding and estimating. So the town has issued an RFP. The building committee interviewed, or will be conducting interviews of potential firms, I believe this week. That'll give us a better understanding of where the project is once that firm is engaged, and we'll be coming back to the board with more information in the future.
Jamie, what was that building, what was the certificate of occupancy on that? For the police department?
Was it late 90s, 99?
I was thinking
Yeah.
2000.
Yeah,
2000?
99.
Oh, it was, yeah, okay, so you're looking
Yeah.
at
No,
20.
Actually, I was hired in '98, and they were operating out of the new police station in '98, so it might have been more like a couple years before that.
Yeah.
It was late 90s.
It was late 90s, yeah.
Definitely late
So
90s.
you're close to
25, yeah.
close to
25
25, 30 years. on
Yeah.
that.
You may recall that, I mean, in that previous budgets, we had a moisture issue
Right.
in the lower level, some other issues. Cell blocks don't meet the current standards, so we're consolidating that all under one project. We did, as John Hefferly, our town engineer, updated you on the STEEP grant, and mentioned about the efforts that the engineering department have undertaken to secure additional funds from other than local funds. We did apply for a SHIP grant. That's a small harbor improvement program. There's some work that still needs to be done at the Branford Point, down at Branford Point Wharf. We feel that we may be successful, although we have not had formal confirmation, but we do anticipate that there's a strong possibility we will receive funding for that project. And there is what was the local match on that?
I think it was 250, wasn't it?
Yeah, 250,000 would be our local match for that, but we would leverage that to get $1 million was our ask. We did submit a grant application for the Climate Resiliency Fund, the Connecticut Deep. Last meeting, I believe, the board approved $75,000 to do a study of the sewer treatment plant, as well as the pump stations and the vulnerability with a 100-year and a 500-year storm. The next phase would, depending on the outcome from that study, actually would be to do a design for a project. So we applied for $1 million for that grant. There's no local match required or requested on that, but I think we would be expected to do a project if we were to receive and utilize the money for the design. We do have a couple applications in at the state for eligibility of a local bridge. The local bridge program, I think, reimburses the town approximately 50% of the project. So we're looking at the Supply Pond as well as Stony Thimble Island Road Bridge. Those two bridges we submitted up to the state to get them, make sure that they are eligible for reimbursement, and the state would cover us 50%. I think that's the same program that we did the Harbor Street culvert program, which we just closed out, or getting ready to close out. The Main Street reconstruction project, Jim, we had with John, who was referencing earlier. We did, we'll probably need additional dollars we will need additional dollars for design in the area. We estimate probably around $400,000. That is just for design. We're responsible for only the design cost. The construction cost is funded 100% through the lot SIP program, which we secured $8.2 million for.
Where does that 8.2 come from?
It's a lot SIP program. It's actually federal dollars that are administered through the state of Connecticut, and the COG, through our each COG, Council of Governments area, gets a certain allocation every year. And we just increased, we requested an increase for that project. You may recall, I believe we had a project that was previously funded, the roundabout, because it fell within state right-of-way, became much larger project, and really wasn't aligned with what our vision was. So we reallocated those dollars through Main Street. As we got into the Main Street project, we realized there's a lot more that we could be doing in terms of addressing the purpose of those funds. So we increased that, like I said, that request to $8.2 million, which our COG was supportive of. The Meadow Street is another project that's also a lot SIP program. I believe we might have $2 million of lot SIP dollars set aside for that project. But again, that's early on. We don't know if we'll need additional dollars yet. But given the cost of things escalating, it is a project that we will be undertaking in the near future or within the next couple of years. But again, 100% of construction would be funded through lot SIP. We would just be required to cover the design costs. Rose Hill project, Joe, I believe you asked about that earlier. There was a development potential that was proposed a few years ago, actually a number of years ago, it was probably 2011, 12, where it was I believe a 10-lot subdivision at the time. The town saw that, with that sewer work that was going to be done as part of that project, that they could sewer that area, Rose Hill, Pent Road area. That project never came to fruition. However, we believe that there may be some renewed interest in bringing that project back to life. We met with the potential developer. So if that project does move forward, we once again want to leverage that opportunity to sewer that area. And it's an area with some failing systems and could really use an upgrade. So we do have $1.1 million already allocated. However, we do anticipate, through obviously just the cost of escalation, that project is probably closer to $2 million. But again, those would be paid through the sewer assessment fund. We would build the project and do it, but we would over time recoup the money through sewer assessments. The last project is the boardwalk. You may recall we funded the design for the boardwalk. That's to connect Indian Neck Avenue to South Montague Street along the river. John Hefferly has been working on that project. He's met with DEEP, Army Corps. We're still waiting to anticipate we'll need additional dollars for design. As far as the funding that project, we do feel that is a strong candidate for grant funding. and we'll actively pursue funding. The other thing, just to mention the board, as you are fully aware through the budget process, that the cost of handling our municipal solid waste and recycling has been volatile throughout the years, escalating every year. We had a recent study done, as well as met with some other firms and looked at how we were doing things. And really the long and short of it is where the town of Branford, I believe, has over the years has benefited by having a multi-stream collection in terms with our recycling. Where we are today and where the industry is going, it is now, now it's becoming we're not finding contractors that will collect, that want to collect. I think the last time we went out to bid, we only had one bidder. The time we went out to bid for curbside collection, we only had two. It's very labor intensive how we, sort our recycling and expect it to be collected at the curb. It's labor intensive, it's capital intensive in the sense that, to get the type of truck that you would need to do that collection, they're just not making them, or they're not as readily available as the single stream type trucks. That's at the curbside collection. When it comes to the disposal end, a lot of our recycling is just what they would consider contaminated. It's very difficult to maintain a very clean, segregated recycling stream. And quite honestly, the investments at the facilities are not they're all geared towards handling single stream recycling. They're not in terms of, we're not going to be able to bring our paper or bottles and cans to a facility that just handles that project and have it at a level of quality that they would be looking for. We're just not a large enough market for them, so we're going to be transitioning to single stream. The Solid Waste Commission has drafted an RFP to solicit for proposals for our July 1 contract date for curbside collection and disposal of solid waste, municipal solid waste, and recycling. So we do anticipate that going to a single stream, we would have an initial outlay of probably in the area of $1.3 million to purchase all the carts that we would have to then provide to each of the residents. But again, those numbers are still being developed, but it is something that is there will be an initial capital outlay to make that transition.
So on that, just briefly, they pick everything up together at the curbside?
Yeah, and it's automated, so basically you would have a larger toter. You would put all the recycling in that toter, and they would come and have the automated lift.
You put everything, waste in?
No, all the recycling would be in one bin. So now how you're supposed to be separating,
right.
The cardboard,
right.
paper product, bottles and cans.
Yeah.
The problem is too, there's not a market, even when we try, if somebody does, hey, listen, I'm separating all my stuff. The market's not there. It's a few years ago, it just really tanked in the recycling end. But also even with the bottles, cans, and glass, there's once you put that in, there's a very limited market for that product. And I just saw a recent study, and I think it's something less than I think it was around 10% of our plastic that we think we're sending to recycling is actually getting recycled for another purpose. It's where we are.
Yeah.
So,
Okay, that's a good
Yeah.
overview. Any questions on that information? It's okay. So I guess,
Yeah, one,
Charlie,
hey, Jimmy, are you thinking maybe the town is gonna invest in its own pickup trucks?
no, we wouldn't.
Okay, no, I just
Yeah,
thought,
no, we don't want to be in that.
no, I know,
business,
but I thought maybe
No,
that
we
was.
would just, we would have to buy this is just for the
Yeah, they
large
can't.
toters, for
Mm.
the initial
Okay,
supply for those.
okay. Thanks for that update. I think we're good with that information. I'm sure we'll see more in the budget process and future updates, so thank you. Item number 17 is consideration of adjournment with no other business to come before the board. I'll entertain a motion to adjourn.
I'll move it.
Moved. Seconded. All in favor?
aye.
Aye. Thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.